Hi, this is Randy Finney with Right Side of the Chart, and this is a market wrap for Tuesday, October 9th, 2018. Technically speaking, not a market wrap. It is 3:28 p.m. Eastern Time as I'm starting this video, so we have a little bit over half an hour to go in trading. I wanted to keep this video short and get it out before the close. Did another video this morning, a market opening video, or started in pre-market, and that was for members only because I covered some trade ops on nat gas, crude, some other things like that. But I'll go over those levels that I covered this morning. And I wanted to also take a look here, start out with the daily chart and take a look at what happened. So yesterday, I mentioned that was a consolidation day, and I expected another one today. And at best tomorrow. But even if we get a consolidation day tomorrow, I think we'll sell down in the close. I think we'll probably do that today. In other words, 2 days, sometimes you get 3 days. But for the most part, and I went over this yesterday. Let's just look at let me show you this board here. And again, this is what I was talking about yesterday. We've only had a couple big corrections in the last couple years here, so it's not a lot of examples to use, at least on this QQQ chart. But what I was referring to, and I covered this in the video yesterday, usually you had a big bearish engulfing candle, you had 4 down days, 4 red candles, and then you had that period of 2 days of consolidation. It looks like you can see from this candle, if you really zoom in close there, here, let me do that for you. You can see this candle, how high it got, and then so that rally, at least at some point in the day right there, was faded. And that's usually an indication the sign's over. Things start to look bullish, and just as it looks safe to get back in the water, that's when you usually see things dump. So that's what I'm watching for today. I'm leaning towards that. I was, came into the day. Oh, okay, that's a long story. Came into the day short, posted that on the site last night that I was going home short. We had a little pullback in the pre-market session. Futures traded mostly flat overnight, and as I stated this morning, I reversed it to go long because I thought we'd bounce today, and I put up some targets. I'll get to those in a second. We'll take a look here. But again, this is just that one example there of a couple that I've mentioned, that usually that midpoint consolidation zone that we get. We can go back, and I showed you one other one here. So let's look at this right here. This looks similar to what we're at right now. This period here, you had a couple, big red impulsive candles. There's that little consolidation candle, that small green candle right in between, and then another big red candle following up to the downside. And we only had one more day. And we could, if we dropped hard tomorrow or one day this week, we could hit those near-term targets that I'm looking at and bounce from there. Could happen in one day. And again, I can't rule out another update. I can't rule anything out, but right now, that's what I'm leaning towards. I think this is done now. Let's cover some levels. While we're on QQQ, that chart I started with here on this board, you have this long-term trend line that comes in, and let's just say my minimum swing target. We need to take out the 178 level. We had a stick save. That's a pretty good support level as I talked about. So really this all comes together tomorrow. If we get a big down day, whether it's tomorrow or one day this week, we're going to take out this support, which I think is pretty important on QQQ. I'm going to show you a comparable support level on SPY in a second, but a lot of reactions there, a little breakout, and we back tested it there. We've traded through it a little bit, but there's enough reactions that I think it's an important level. So there it is. So look for a break below 178, and of course, take out yesterday's lows. That would help seal the deal or increase the odds, I should say, of a move down to this uptrend line and quite possibly the 169 level. And one scenario I can see happening, I might have already mentioned this, is come on down here. Maybe it takes a couple days, some point this week, early next week at latest, probably, if it does play out the way I think it will be. Maybe even overshoot that, come down, kiss that 169.60 level. It's a pretty decent support level, and then bounce back to close the week or the day on that trend line support right there. So that's sort of, let's just say, my preferred scenario. I know that's a lot of little micro calls within there, but I'll be looking for that, and if it looks like that's going to be the case, that's how I'll trade it. So there it is, 169.60. You can see the reactions there and why I picked that level. And you can also look at it this way on this daily chart. Let's go back to that clean board. This appears to be flagging action, a bull flag. And if you're not familiar, I'm sorry, a bear flag in this case. If you're not familiar, Google the term, search the term, and you'll get it. It's basically a level, an area of consolidation. That consolidation typically occurs on decreased volume, which you have here. And so we've consolidated the last 2 days, and The bear flag is a continuation pattern. It comes after a sharp downtrend. That's called your flagpole. And then it's a pretty simple pattern to trade. You look for a downside break of the flag, and it may show better on the 60-minute chart. We'll take a look in a second. I haven't really looked yet. And you add the flagpole, which is a measured move down to where the flag started forming. Add it to the top of the flag, and that gives you a measured target. And that probably come in somewhere around that area I was showing you a minute ago, where I'm looking for, the first tradable, well, that define your time horizon. Today was a tradable bounce. So, made some money on NQ going long, but that's very active trader stuff. I'm talking swing trader stuff. I know the majority of people listening to these videos work full-time jobs, part-time jobs. Maybe they're retired and don't want to trade full-time. So very active trading may not be for you. So this is the swing trading scenario right here. Okay, here's this is a 2-hour period chart, meaning every candlestick is 2 hours or 120 minutes, and that goes back to the early April lows. There's a trend line, the breakdown, the impulsive selling. And again, so as we zoom in here, you can make out that flagging type action a little bit better. So there it is. I didn't do a perfect draw, but that would be your bull flag, bear flag, I'm sorry, bear flag pattern, and break down there, take us down somewhere along there. So what do you want to look for? Well, you want to look for an impulsive breakdown. You want to see the selling pick up, be pretty impulsive once it breaks from the flag. Those support levels I just mentioned a minute ago, you want to see those taken out, and that might be what we're looking at here in the next couple days. That's my preferred scenario right now. Okay, and this is between today and yesterday. Really, I've been, now that the bigger picture was formulated, I've been trading off these intraday charts, really focused on the 15-minute all the way down to the 1-minute charts. I'll get to those in a second. But again, and this was covered in this morning's video for members of the site. You had this divergent low here. I mentioned that we had SPY, a lot of key stocks, Apple included, at key support levels, whether it was trendline or price support yesterday when we hit those lows. So you were at support, near-term oversold, bullish divergences, all the recipes that I like to see for a bounce, and that's what happened. So, it wasn't anything huge compared to the move down, but it was, let's try to measure it out for you in percentage terms from lows to high, about 2.25%, about 2.3%. So there it is, the breakout, the initial leg down, and looking at this 15-minute chart, it's still somewhat constructive because you have the PPO right here is back above that zero line, indicating at least this 15-minute trend is bullish. You can see it's also curling up, making a bullish crossover. So I still can't rule out another thrust up here. This morning that was a target I was eyeing. We had a reaction on this first target, 180.50, but this one's still certainly a possibility. Probably not today, maybe, but possibly tomorrow. Maybe we gap up tomorrow. That would be a nice scenario. Gap up around 181.50 and then reverse there. But again, that's my preferred swing target, and where I think we'd probably most likely reverse, probably an objective shorting entry, and that's my uppermost bounce target. It doesn't mean we can't go higher. It just means if we take that out by a whole good amount, especially on a solid 60-minute close, several 60-minute candles above it, it starts to really chip away at this whole, pretty nice bearish scenario that we have now, all the developments that have gone on. So again, there's the bounce target zone, and we've already, exceeded it popped right inside the lower end of it. Now, keep in mind too, the lower this bounce goes, if my scenario proves correct, and we're about to, take another leg down this week or next, the shallower this bounce is, the more bearish that is. It just goes to show there's not a lot of buyers stepping in at this point in time. And, from supply dynamics, that's, more sellers and buyers are going to go down. It's not a good sign. So we'll watch that. Those are the levels to watch on QQQ. And these are some micro levels. This is a 2-minute chart. You can see a Fibonacci retracement line here from these highs right here down to the lows. I like to line those fibs, especially if it looks like what's going to be a retracement, counter trend bounce. In this case, if you're viewing the near-term trend as bearish, this is a counter trend bounce if you're expecting more. And you can see, very often you can see how well these fibs act as support resistance, even when traded through here. And so today we stopped there at the actually went up, just pierced above this 61.8 and then came down, and so far the 50% fibs capping that level. But let me go down to a 1-minute chart and I'll show you some other micro levels to watch. This trend line here I was watching all day today was forming pretty well, and when we broke it, you can see that that triggered the sell-off today. I mean, it wasn't right at the highs, but it came shortly after the highs. And again, well-defined trend line. Somebody asked on the site today, how do you draw trend lines? And it's an art, not a science, but typically try to capture the most number of candlestick bodies and or shadows. So, on an uptrend line, those are the tails, and that one fit pretty well. And you can see once it was broken, it was kicked off with a big impulsive red candle there on the 1 minute chart, and so far, we've consolidated since then. Now they may park it here into the close. Again, I was expecting a consolidation day. I don't expect, any big fireworks today. May see a little more of that tomorrow, but then I think if my read is correct, we'll probably resume the downtrend at some point tomorrow, whether it's early in the morning or by the end of trading tomorrow. Rarely do you see more than 3 consolidation days in a row if we are headed lower, especially how impulsive the last couple of days were to the downside. Okay, quickly here's SPY 15-minute chart. Similar downtrend line on the 15 minutes, same divergences down there. This support is not shown here. I'll show you a second again, and I covered it in the video yesterday. This was a pretty important, significant uptrend line off the April lows in SPY as well. I showed you the uptrend line in QQQ a minute ago, I believe. So there it is. So we were at support, bullish divergences, near-term oversold. Again, as I mentioned yesterday, not anywhere close. Well, getting there, but not yet oversold on the daily time frame. So there's plenty of more room to go down without getting too stretched. So similar to QQQ, you're looking at fairly constructive posture on the MACD, but I don't put too much of weighting on this. And these lines, they're still above, but they're angled down now, and this is just a consolidation zone. So just to highlight it, these were let me back up. This was my minimum bounce target here, I should say. All these yellow lines. And again, this was covered yesterday. This is my max bounce target. And again, I don't want to see SPY get over there. If you do, I don't think it's, if you're planning on shorting, scaling in, I would scale in up to, and this is just what I would do. I can't tell you what to do because I can't give individual advice, but I would scale up to that level, but not add to it. Because if and when we take that out, it starts to chip away at the bearish scenario. And same thing on the downside. If we continue to move lower, you can scale in, especially on a break below those lows. And then finally, let's look at the more significant levels, which is this. Here it is, that uptrend line on SPY again off the early April lows. A lot of reactions, and the fact that we have had now 1, 2, 3 reactions over the last 3 days further validates that as an important support level. The more reactions you have, the more valid a trend line is, in my opinion. So there it is, move down and break below that. If we take out yesterday's lows, that will put us below that trend line. Even better if we print a daily close, or you get a big red impulsive candle through. You don't always have to wait for a daily close. If you have a big red impulsive candle, it looks like there's very little chance of the market turning around and reversing those losses. You're probably going to get a daily close there, and again, this take us down to at least that 279.80 level. And you can see similar on SPY, it's that flagging type action where you had an impulsive move down, a little area of consolidation, takes the form of a bear flag, and then that should take us down right around there. I know that might measure out a little longer, but I use the measurements as a rough gauge. And if I take any chart pattern measurement, in this case bear flag, I'll look for the closest level of support. If I happen to have a pretty good support level just above, that's where I would be looking to cover. But in this case, I think we'll probably come down here to 279.80. But as always, if you're trading SPY, you have to watch QQQ, because if QQQ comes and hits support just before SPY gets down to 279.80 and QQQ reverses, it'll probably take SPY up with it, because they're both top heavy with most of the same top components. All right, let's wrap it up here. We're at the 14-minute mark. I want to get this out before the trading day ends. So that's it. Those are levels to watch. That's where I think we're going. And if anything changes, I'll let you know. This has been Randy Finney with the right side of the chart. As always, if you enjoyed the video, thumbs up on YouTube would be appreciated. Thank you.